If you earned just $5,000 last year from Uber or Airtasker and didn't declare it, the ATO can data match the full amount straight from the platform and hit you with back tax, interest, and penalties. That's because every single dollar of gig income is assessable, even for a one-off job. And here's the part most side hustlers miss. Under the sharing economy reporting regime, Uber and Airtasker now legally report your earnings to the ATO. So by the time you lodge, they can already see what you made. Stick with me because I'll show you exactly how to get ahead of it. Here's the number that trips people up. The ATO's tax-free threshold for 2023 to 24 is $18,200. If your day job already puts you above that, then every dollar of Uber or Airtasker income on top is taxed at your marginal rate. There's no free buffer left for the side hustle, so a bit of extra cash from gigs isn't tax-free just because it's small. It stacks straight onto your wages. Let me show you why this matters with real numbers. Imagine you earn $25,000 a year in undeclared gig income and you drive rideshare on top of it. Income tax at a typical 27.5% rate is around $6,800 a year, plus roughly $1,800 in GST on your Uber fares. Over 5 years, that's about $43,000 in back tax and GST, and that's before the ATO adds interest and penalties once its data matching catches up. Your first move is to see exactly what the platforms have already told the ATO. Log into partners.uber.com, click Tax Summary, and download the annual statement showing your gross fares and fees. Then log into Airtasker and export your full earnings history for the financial year. These are the same figures the ATO holds, so they become your official income numbers, no guessing required. Now add your Uber and Airtasker income together and compare it to what you actually reported as business or other income last year. If any amount is missing, don't wait for a letter. Prepare to amend your return or disclose it this year. The ATO says whatever form the engagement takes, income from a digital platform is assessable and must be reported, even for occasional or one-off jobs, so every dollar on those summaries needs to be in your return. This step catches out almost every new driver. The ATO requires all ride-sourcing drivers, including Uber, to have an ABN and to register for GST, and that applies regardless of how much you earn. On $18,000 of Uber fares, the GST component is 10%, or $1,800 a year that you should be collecting and remitting. Uber confirms it doesn't withhold or file any tax for you, so if you're a rideshare driver, register for an ABN and GST through the ATO's online business registration portals and set up quarterly BIS reminders. Before I get to the last move, which is the simplest but the one that actually saves you from a shock bill, you need to watch one more threshold. If your gig turnover across all platforms hits $75,000 a year, the ATO requires you to register for GST, lodge business activity statements, and remit GST, even if you're not driving rideshare. On $80,000 of turnover, that's 10%, or $8,000 in GST alone. Many gig workers juggle multiple apps and cross that line without realizing, so total everything together and register the moment you're approaching it. Here's the move that changes everything and stops the whole problem before it starts. eTax notes the average Australian tax rate sits around 25 to 30% and recommends setting aside 30% of every gig payment for tax. If you're GST registered on rideshare, bump that to around 40% to cover the extra 10% GST. Set up an automatic transfer rule in your banking app so the moment gig income lands, that cut moves straight into an ATO savings account. If this breakdown is useful, subscribe. There's one like this every week. To make the risk concrete, picture someone earning $60,000 from a day job plus $25,000 from gigs. Because the wages already use up the tax-free threshold, that full $25,000 is taxed at the marginal rate, around $6,000 to $7,500 using the 25 to 30% guide from eTax. When the ATO data matches Uber and Airtasker's reports against the return, it can issue an amended assessment and demand that amount plus interest. Two mistakes cost gig workers the most. The first is treating small jobs as cash-in-hand hobby income and assuming the platform handles tax. It doesn't, and CPA Australia warns that not reporting risks amended returns, extra tax bills and penalties. The second is ignoring GST until the ATO makes contact, which for rideshare drivers means backdated GST plus general interest charges once data matching picks up the undeclared turnover. Declaring everything up front is always cheaper than being found. Let's run the whole checklist fast. Download your Uber tax summary and Airtasker history, then match those totals against your last return and fix any gap. If you drive rideshare, get an ABN and register for GST from the first dollar and track your combined turnover against the $75,000 threshold. Finally, automate setting aside 30 to 40% of every payment so the bill never surprises you. Sorting this out now, while you can amend and disclose on your own terms, is far cheaper than waiting for an amended assessment with interest attached. Next, I'm breaking down exactly which gig work expenses you can legally claim to slash that tax bill, from fuel and servicing to phone and platform fees. If you want to catch that one, subscribe so you don't miss it.